Welcome back, and joining us on the show now is Paul Bartholomew. He's Senior MD at S&P Global Commodity Insights. Paul, hi, thank you for your time. The latest data, the trade numbers that have come in from China actually are on the supportive side. I mean, barring all the economic data that we saw in the previous week was weak. How are you reading the trade numbers and its impact on commodities?
Yeah, hi, Manisha. Well, it's been quite interesting, really, because obviously China's just held its annual general meeting, which is colloquially known as the Two Sessions, which everybody looks at very closely to see if there are any signs about potential stimulus and other kind of economic targets, etc. And I have to say the market is very well, at least the market in China is very disappointed. I think really there's been very muted reaction. There's been no bounce in the futures, no bounce in the prices. I'm talking sort of metals and ferrous metals, steel, things in particular. So I think, it's left everybody a bit kind of underwhelmed, really. I think the target still looks quite ambitious when you look at how flat the economy was last year. But I think in terms of stimulus support, it's going to take. I think it's going to be very difficult to move the dial because, the economy is still coming out of some of the impacts of the pandemic and obviously the deleveraging housing. And I think there's a lack of consumer confidence and confidence in metals markets that's really kind of hanging over China. Obviously, that has a big impact on, markets all around the world.
Clearly is. Paul, most of the reports now suggest that while China, of course, is still coming out of its concerns, India could see double-digit growth in sense of demand going forward. How would you look at India in sense of demand and growth going forward?
Yeah, well, I suppose India is really one of the few bright spots, really, if you look around the world. I mean, if you look at Europe and the US, for example, very, very flat. There's just no demand coming back. So a lot of the price increases or price strength really comes to do with producers cutting production rather than people actually buying things on the supply side. So I think India's a little bit subdued. Obviously, it's just coming into that period before the election when things go a little bit quieter. But I think if you look at, for example, new capacity coming on in India, new steel capacity, steel production. I think there's a lot of growth. If you look at some of the other economic measures, obviously the manufacturing PMIs, things like that. India is one of the few kind of bright spots, really, around the world. You look in most other key markets, especially Europe, and it's very flat still.
Paul, how would you look at the prices going forward from here? Because we're trading at a 4-month lows on steel and iron ore. Some of the non-ferrous metals in relation seem to be doing better. But from here on, what is the trajectory that you're working with?
Yeah, well, I mean, I think in terms of sort of China, and obviously that has such a big influence on other parts of the world, we're kind of seeing a bit more of the same, really, this year. We can't really see what is necessarily going to sort of move the dial as such. I mean, iron ore tends to be a very volatile market. It can be very sentiment driven. Obviously, last year was quite strong. China's iron ore imports rose by 6.6%, very, very strong. We're seeing nickel, sort of the LME nickel prices have been rebounding a little bit, I think potentially off of, some US sanctions on Russian imports. But I think we've got most prices kind of, steel prices in China, we've got, maybe down around 1 to 2% this year. I think what's going to be interesting to see whether some of that seasonality returns. We've come out of a few years of the pandemic, and I guess some of the supply chain issues, in the wake of the pandemic. So we haven't really had, a couple of years of just, I guess, sort of normal markets. But then again, what is normal these days? There seems to be so many events impacting things. Seems to be a black swan event, twice a year these days. So so I think we've got everything sort of a little bit kind of a bit down. Even like Indian steel prices, which tend to be quite stable, perhaps just a little bit flatter because they also take cues from other markets.
Paul, a final question then. So if you had to pick something on a long side, what metal would that be?
On the long side, probably. Well, I think things like copper. Obviously, they really depend a bit on. I guess obviously the economics. So that they also pick up their cues from China and also and also production from South America, etc. But I still think there's a bit of upside for steel. I think also aluminum, but I think it could be quite when you say on the long term, it depends how far you're looking out. Obviously, battery metals have been so weak for a while, so it's going to take, I think, a couple of years to really kind of ramp back up. You really need to get that demand to come back into regions like the US and Europe, and I think and also China actually. But it also it really depends, I guess, on those economic headwinds. Some of those monetary, tightening starting to be eased around the world will help that consumer-driven demand, and that will help metals in turn.
Okay. Paul, thank you as always for joining us here at CNBC India. And of course, as you pointed out, there's just too much to watch out for. And this perhaps could be a year yet again where we could be looking at flat to slightly negative in sense of many of those metal prices there. But with that, that's a wrap on Halftime Report. Business Lunch will take all the action forward.